Do you need mortgage insurance if you're buying a home for the first time? Hey everybody, how are you? Enrique here with the First Time Buyer channel. And this is the channel where we talk about everything related to purchasing your first home. So if you are thinking about buying a home, maybe this is a dream of yours to become a homeowner, and you want to find out more about how to go about it, this is the place to be. Don't forget to hit subscribe. Go check out some of our other videos. We talk about everything related to buying a home, whether it's credit, down payment, how to find the perfect home, how to find the perfect realtor. You have come to the right place. But today, we're going to talk about a topic that comes up a lot, and it has to do with mortgage insurance. A lot of people also call it private mortgage insurance, and some people call it PMI. It's the same thing. We are going to talk about everything related to it so you can get a clear picture whether you need it or not, or why is it that you need it. So what is mortgage insurance and how does it work? Let's start with that. Okay. When you are purchasing a home, the banks ideally would like to see you come in with a large down payment, at least 20%. That's what they would like to see. The reality is that most of us, many people, don't have 20% to put down on a mortgage. They may have only 10% or 5% because they're first-time buyers. You know, imagine this. If you're buying a home in California and the house is $600,000, 20% is $120,000. So for a lot of people, even if they make really good money, it's difficult to save all that money. So what alternative do you have? Well, the alternative is to purchase a home with a lower down payment, 10%, 5%, even 3.5%. Well, when you do that, the banks will still approve you. They will still give you a loan, but they get a little nervous. They said, hey, what if this person defaults on the loan because they didn't put enough down payment? Banks have an understanding, a belief that the more down payment you put on the house, the less risk they have. And it makes sense. If you put $100,000, $200,000 into the home, chances are you're not going to walk away. But if you only put $5,000 or $10,000, you may be more likely to default. At least that's what they think. So they came up with a system. They came up with an idea many, many years ago where they created something called private mortgage insurance, or PMI, or mortgage insurance, where they let you buy the home with 5 or 10% down, but you have to purchase an insurance policy through the bank that allows you to have a house with low down payment. The basic idea is that if you default, if you stop making the payments, if you decide to not pay the loan back, then the bank can file a claim with the mortgage insurance and they get their money back. So it's very, very similar to car insurance, right? If your car gets stolen, you don't have to pay it back. The insurance pays for that. If the car gets damaged, insurance pays for it. Here, if you don't make the payments and the house goes into foreclosure, the bank doesn't lose any money. They file a claim against the mortgage insurance company, and there you have it. So how do you go about getting the mortgage insurance? Is that something you have to worry about? Well, the truth is, no, you don't. If you are going to purchase a home and you're putting less than 20% down, your loan officer will tell you, hey, you're going to need mortgage insurance, and they order it for you as part of the process. We actually do a little bit of shopping around. Some banks have different companies that they use. They're all very competitive. Mortgage insurance is not very expensive. It can be anywhere between $50 and $300, depending on the loan amount, depending on how much down payment. So what do you do with mortgage insurance? Does it just sit there? Do you have to pay separately? No. Every time you make a monthly payment to your mortgage, a portion of that goes to the mortgage insurance. And then the bank is responsible for sending that over to the mortgage insurance company who collects that money. And it's pretty good business. Imagine all the people who have mortgage insurance. I don't really know that there's a lot of people defaulting right now. There's not a lot of foreclosures. So it's good business because they're just collecting a lot of premiums and they're not really having to pay out a lot of claims because no one's foreclosing. Now, if there was going to be a foreclosure wave in the future, they're going to be exposed to a lot of money because a lot of people have mortgage insurance. Now, do you have to keep the mortgage insurance forever? Well, the truth of the matter is, no, you don't. There are some alternatives on how to get rid of the mortgage insurance. First of all, you need to know that you have to keep that mortgage insurance for a while. So don't think you're going to buy a home and it's something that in 6 months or 8 months is going to go away. It's going to be there for a while. But after a few months, after a few years, a couple of years, sometimes a year, year and a half, you should call your loan officer and say, hey, is it possible for me to refinance to get rid of the mortgage insurance? If you have an FHA loan, a government loan, FHA, USDA, you have to refinance into a conventional loan to get rid of the mortgage insurance. So you have to find out if you have 20% equity. Like right now, we are in August of 2021. People who bought houses a year, 2 years ago, they have the 20% equity because the values went up. This is a time when values went up a lot. There's other times in history when it doesn't. A year goes by, the house goes up 5%, 7%. Right now, they're going up. So people who bought a house a year ago, they're in good shape. So the bottom line is this, is that you're going to be able to refinance out of that mortgage insurance, but you're going to have to walk through that process. Your loan officer will help you find out how much your house is worth, if you can get a new loan. Maybe you can lower the rate and get rid of the mortgage insurance altogether. Mortgage insurance is necessary if you don't have the 20%, but it's not something you should keep forever. The other day I talked to someone who's had mortgage insurance for 5 years. And I said, well, how come you haven't refinanced? She goes, I didn't even know I was paying mortgage insurance. I looked at a mortgage statement and it's a tiny line item right there, page 2, mortgage insurance, $200. This person's paying $200 a month, month after month. For years they've had it. They should have refinanced a long time ago. But the reality is, that's how it is. So if you are a first-time buyer and you are going to buy a home and you're not going to put 20% down, there's a very high likelihood you're going to have to put that mortgage insurance payment in it. But watch it. Keep an eye on it. Stay in touch with your mortgage loan officer. Find out if you're going to be able to get out of it, refinance out of it. And if you are, why not? Get rid of it, lower your payment, and there you go. That is all I can tell you today about mortgage insurance. There's more to know about it, but this is basic stuff for you to know. With this information, you are now more educated. So if you want to find out more about mortgages or about how to buy a home, drop us a line, reach out to us, go to our website or comment below. Also, don't forget to hit subscribe and don't forget to check out our other videos. I hope you have a great day. Enrique with First West Financial. Have a great day.